Good morning, Suprabhat, Namaskar to all of you. Vadakkam, Sasriyakal, Kem Cho, etc. So I am C. Ankit Sharma, your income tax faculty for the session. And today we will be discussing the provision of residential status and scope of total income. In the last session, we have gone through with the provision of finding out when a person would be regarded as a resident or non-resident, or there were subclassification also regarding resident and ordinary resident and resident and not ordinary resident. We have also gone through with the concept of deemed resident under section 6(1)(a). I believe you must have gone through with all the provision, you must have revised the provision, and you are studying very hard to achieve the goal of your life to become the chartered accountant as soon as possible. So before starting the class, let me tell you, as usually we ask in a class before starting the class, at the time of starting of the class, that we will revise some provision which have been discussed in the last session. So today I will ask, or I want to ask regarding these concepts. So you can raise your hand accordingly. I want to know the special conditions of category B. 3 special conditions were there. 1, 2, and 3. So I want to ask from anyone who is going to explain condition 1 and 2 and 3 individually also. First of all, I would like to ask someone is going to explain what is condition number 1, then 2, and then 3. Then I will ask resident and not ordinary resident condition number 1 and condition number 2. And you must have remembered that for category B, third category person, third special condition individual is having an additional condition to become a resident and not ordinary resident. So two conditions are same, but there is an additional condition for B third category individuals in case of resident and not ordinary resident. Then somebody will explain deemed resident under section 6(1)(a), and then the HUF, if HUF needs to be a resident and ordinary resident. So these topics I would like from all of you or any one of you is going to explain one by one. So first of all, the special condition number 1, 2, and 3 I would like to ask, and I guess first of all Mehak raised the hand. So Mehak, please go ahead.
Good morning, sir.
Your voice is not clear, Mehak.
Am I audible, sir?
Yes, now you're audible. Please.
Sir, am I audible?
Yes,
Good
of course.
morning. And as a special condition, there is a three situation. First situation is that those are the individuals plus citizen in India and going outside from India for the purpose of the employment and the crew membership of Indian ship. And this condition is not applicable for the traveling purpose. And this condition only fulfill if a person resident condition more than 182 days in resident in India in previous year and become a resident. And situation 2 is those are individuals plus citizen in India or or person origin in India plus those are the reside outside the India for the visit purpose. There is a condition more than 182 days condition in India in previous year become a resident. If not, then non-resident. Situation number 3, those are the individuals plus citizen in India, person origin of India plus reside outside the India and earning any income which is resource from the India exceeding 15 lakh rupees and for the visit and there is a two condition are the must be satisfied for become a resident. More than 182 days is resident in India in previous year and more than 120 days in previous year plus more than 365 days in 4 preceding previous year become a resident.
Well done, Mehak. Well done. But when you are saying more than 120 days or more than 365, remember it is equal to or more than. It's not
Okay, sir.
more than. It's equal to 120 or more than 120. It's equal to 365 or more than 365. Okay, well done. Very good. Very well explained. So now the second is who will tell me the resident and not ordinary resident, case number 1 and 2, and for B category, third person. In that case, there's a third number additional condition also there. So who would like to explain the provision of resident or not ordinary resident in case of individual? Ketan has raised her hand. Yes, Ketan, please go ahead. Ketan, are you there? We are not able to hear you. Okay, anyone else? Mac, you want to explain? Fine. Aisha wants to explain. I guess she raised. Okay, Aisha. Aishal, sorry.
Good morning, sir.
Good morning.
सर रेसिडेंट इंडिविजुअल के केस में ROR में more than or equal to 730 days in previous 7 preceding previous year and resident in 2 years out of 10 preceding previous year और non-resident के केस में person not ordinary resident के केस में first condition more than 730 days in preceding previous year in India or non-resident 9 out of 10 preceding previous year. Second जो अलग से condition है वो more than 120 days, more than or equal to 120 days in India or less than 182 days in previous year.
अच्छा देखो ना थोड़ा सा मिस्टेक हो गया है आई गेस बिकॉज व्हेन वी एक्सप्लेन रेजिडेंट एंड नॉट ऑर्डिनरी रेजिडेंट so it's not more than 730 days. So you would be in India less than 730 days in 7 preceding previous year. To become a resident, you are saying more than equal to 730. So it's less than 730. The more than 730 concept in case of HUF only. Fine. So थोड़ा सा शायद words इधर उधर हो गए but it's okay. Well done. No problem. Okay, so we will explain again this concept. Nisha wants to explain. Yes, Nisha, go ahead.
Hello, sir.
Hello. Please,
Good morning,
little louder, little louder.
Good morning, sir.
Good morning, good morning.
रेसिडेंट के केस में पहले तो नॉर्मली रेसिडेंट को 182 डेज प्रीवियस ईयर के रहने पड़ते हैं. दूसरा 365 दिन में मतलब 365 दिन में
हम रेजिडेंट नहीं पूछ रहे, हम पूछ रहे हैं रेजिडेंट एंड नॉट ऑर्डिनरी रेजिडेंट की कंडीशन. हमें रेजिडेंट वाला तो डिस्कस हो गया. हम रेजिडेंट एंड नॉट ऑर्डिनरी रेजिडेंट बनने के लिए क्या कंडीशन पूरी करनी होती है?
तो 7 प्रीसीडिंग ईयर में लेस देन 730 डेज रहना होता है. और दूसरा कंडीशन है 10 प्रीसीडिंग ईयर में लेस देन 9
Less than 9 नहीं है, more than equal to 9 years non-resident out of 10 preceding previous year. चल कोई well done, well done. थोड़े से provision I guess you need to revise, so it will be better for us. Okay, Ketan, you want to explain now B case third category person when that person could be a resident and not ordinary resident. The third additional condition for that individual. Can you explain that?
Good morning, sir.
Good morning.
So during that time, network issue was there.
No
problem. So condition for resident and non-ordinary resident, bit 1 is less than equal to 729 days in 7 PPY. And second point is more than equal to 9 years non-resident out of 10 preceding previous years. And B third point is more than equal to 120 days and less than 182 days in previous year.
Very well done. Very nice. This is absolutely correct. Well done. Okay. Now the next is who will explain deemed resident under section 6(1)(a). Who is going to tell me what is deemed resident? Nisha wants to explain. Okay, Nisha, go ahead. Nisha? Nisha is not.
बिन रेसिडेंट में इंडिविजुअल होना चाहिए, सिटीजन ऑफ इंडिया होना चाहिए और रेसिडेंट आउटसाइड इंडिया होना चाहिए, 15 लाख से ज्यादा इनकम कमाना चाहिए और उसका विजिट होना नॉट मैटर।
थोड़ा weak है भी provision, Nisha. Please revise it again. Okay, Mac wants to explain. Yes, Mac. You explain what is the meaning of deemed resident. Mac, you explain.
Yes, sir. Deemed resident under Section 6, subsection 1A. Always in individuals plus Indian citizen and plus reside outside the India and income earning from Indian resources more than 15 lakh, and there is and no tax in the country, the person who resides there. And deemed resident section, there is always a person is a resident but not a ordinary resident.
Well done, very good. And the last, now I would like to know about the HUF, when an HUF would be regarded as resident and ordinary resident. Okay, we do not want to listen when HUF would be a resident or non-resident. I just want to know the condition, the sub-classification when an HUF could be regarded as resident and ordinary resident. So there are two
Yes.
conditions. Who wants to explain? Okay, again, Mac is there. So Mac, you can proceed.
Sir,
Just a second, Mac. A new entry is there. Visual wants to explain. So let me ask Visual to explain the provision. Yes, Visual.
Good morning, sir.
Okay.
Good morning, sir.
Morning.
Sir, in the case of HUF, when resident on ordinary resident, there are two conditions. First, greater than equal to 730 days in 7 previous years, and then second condition is and a resident if they are resident greater than equal to 2 year out of 10 PPY.
Very good.
So both the conditions need to be fulfilled.
Very nice. Both conditions need to be satisfied. 730
Yes.
or more in 7 preceding previous year, at least 2 year or more resident out of 10 preceding previous year. And Visual, on which individual we will check these conditions in case of HUF? Upon whom we are going to check? Karta.
Karta, right, Karta.
Well done, everyone. High five from Wi-Fi from my side to all of you. So let's get started. And before that, okay, good morning, Sridhar. Good morning, Aishal. Good morning, Metali. Good morning, man. Good morning, me. Meg, you want to ask something? Okay, no, fine. So let's, before starting the class, as usual, there would be a thought for the day. And this thought I have discussed with you, I guess, in the first session. So I told you that there are 4 S for success. And these are study, to acquire knowledge and skill, sincerity, genuine efforts with integrity, sacrifice, you have to leave parties, function, short-term goals, and you make a strategy, the planning, adapting, and the path you have to achieve. So the management is also important. And if you are able to achieve these 4 S, then you will get the success, that is to become a chartered accountant as soon as possible. So please remember, if you focused on these 4 S, you are going to be a CA very, very soon. So that was a thought for the day. Now we are going to discuss provision, what we have gone through in the last class, and with the help of notes. And before that, of course, we are going to discuss some MCQ from residential status one by one. So I hope you are ready for these MCQ because you have revised the provision nicely. So please read the MCQ and then you can send your answers. Aishal is saying illustration 2, point number B. Can you explain? I am having a doubt in that, and no tax in the country you reside mean we don't pay tax there. Yes, the no tax in that country means there is no tax applicable in that country. This is tax haven country. And you want to know the illustration 2, point number B. Let me explain illustration 2, point number B. Then we will proceed for our MCQs. So That is on page number 2.9. You can see the illustration number 2, point number B. The question was saying that Bratley, an Australian cricketer player, visit India for 100 days in every financial year. This has been his practice for the past 10 financial years. So this kind of question we have discussed in the last class also, in which somebody who was not an Indian citizen was visiting India 100 days every year. So the first point, I hope it is clear. The second point is in the query asked by a student. And he's asking, would your answer change if the above fact relates to Srinath, an Indian citizen who reside in Australia and represent the Australian cricket team? Now, if you will see that if it is an Indian citizen who is coming for visit, so that would be fall in category B. And we have to check condition number 2 and 3 upon it. Condition number 2 and 3 of B category. So condition 2 wants that you need to be in India for at least more than 182 or equal to 182 days in India. So even if you are an Indian citizen, then only first condition need to be checked. And of course, that is not going to be fulfilled. So he will remain non-resident. Now for the third condition, a person who is citizen of India, residing outside India, comes to visit in India. So there is a third condition which says you could be treated as a resident if your total income exceeding 15 lakh rupees. So suppose in this question, if the total income exceeding 15 lakh, then even he needs to be in India for at least 120 days. So because he is in India only for 100 days, so he could not fulfill that condition also. So in this situation, he would be remaining non-resident. Now there could be a third possibility also, which has not been mentioned in the answer. That suppose if income is exceeding 15 lakh rupees from Indian sources and he does not need to pay any taxes in Australia, then in this situation, he could be regarded as a deemed resident. But because that is like a multiple assumption we have to think about, so we are not actually going through that deemed resident concept. But as you can see in point number B, it has been written that he would remain non-resident because for the purpose of becoming resident, at least 120 days should be in India. That is not in this situation. Okay. I hope it's clear now. Okay, I shall. Galti analyst saying no volume. I guess there would be a problem at your part. Okay. So now we are moving to our MCQ part. So the first question comes first, of course, under the Income Tax Act 1961, the total income of each person is taxed on the basis of what? The correct answer is of course citizenship. Who is saying citizenship? Sridhar. What is this? Not correct answer. The correct answer is, of course, residential status. On the basis of residential status, that is going to be taxed. That's why we are discussing residential status topic. Next is taxpayers are classified into how many broad categories on the basis of their residential status. So taxpayers are classified into how many broad category? What is the correct answer? The correct answer of question number 2 is, again, let's see. Because that could be resident, not ordinary resident, or ordinary resident. That we have discussed in the notes also. Next is to claim the status of not ordinary resident for individual. What is the correct option out of these 4? It's a little tricky. To claim the status of not ordinary resident for individual, what is the correct answer out of these? Somebody's saying, Vitali is saying A. So if it is A, only one basic condition. Basic condition means that category A and B category main condition. So even any basic condition has been fulfilled, how you would become not ordinary resident? So the correct answer is option number B. One basic condition. Basic condition means either category A or category B. And one additional condition. Additional condition means to become a resident and not ordinary resident. That less than 730 or 9 out of 10. Those are called additional condition. So a tricky language we can say, but still one basic and one additional condition need to be satisfied. Basic condition means become a resident. And additional conditions are less than 730, 10 out of 9, etc. 9 out of 10, sorry. Next is amongst the following, which is the basic condition to identify the personal residential status of the individual? Question number 4. Question number 4. The correct answer is amongst the following, which is the basic condition? The correct answer is option number A. Person must be in India for or more 182 days during the previous year. You can see in B it is written less than 60 intentionally to confuse you. So that's why this condition is not correct. This condition is for resident and not ordinary residents. Only the first condition is correct in this circumstances. Next is question number 5. Sudeep is a foreign citizen. As I have asked you in the last class also, please identify your question. When you read the question, please identify that either it's going to be the part of A category or it's going to be the part of B category. If initially you have identified this thing correctly, the solution would be really easy for all of you. So Sudeep is a foreign citizen. And the good news, when somebody is a foreign citizen, somebody is not a person of Indian origin, then of course A category apply, but it's not completed yet. It says Sudeep is a foreign citizen. His father was born in Agra in 1961. That means not before partition. And mother in USA 1960. Grandfather was born in Kanpur 1929. So that means Mr. Sudeep is now a person of Indian origin. Now, if a person of Indian origin visits, Sudeep visit to India to see Taj Mahal. He came to India on 10th December 25 for 200 days. He has never come to India before. You have to find out the residential status of Mr. Sudeep. So what would be the correct answer in this case? So he's a person of Indian origin. And if a person of Indian origin who comes to visit, so there would be two category applicable. The B case, second and third. Income information not given, so we will not apply the third category. So we will remaining with only with the second category. And if on the basis of B category second case, second situation, is he satisfying this or not? The correct answer is, of course, option number A. Why? Because this kind of question we have solved. He comes to India for 200 days, but on 10th December 25. So if you will calculate the day he stayed from 10 December 2025 till 31st March 26, then these number of days present. Next. The following additional conditions are to be satisfied by a person to be resident and ordinary resident in India. So if any person wants to be a resident and ordinary resident, read it carefully, student. We are discussing to become him a resident and ordinary resident. What are the additional conditions are to be satisfied? So what is the correct answer? He is in India at least any 2 out of 10 preceding year, 10 previous year, immediately preceding the relevant previous year. And he has been in India for 730 days or more. So if he satisfy both condition, he will become a resident and ordinary resident, like in case of HUF Karta. So if they satisfy both of these conditions, they will become resident and ordinary resident. Question number 7. As an Indian citizen who is living in Delhi since 1980, left for Japan on 1st July 22 for employment. So that year he shifted into Japan. He came back to visit India now on 1st January 2025 and stayed for 4 months. What would be his residential status? Because if he is coming to visit India, income information not given, then we will apply category B, second situation. For that, he must be in India for more than equal to 182 days. And of course, he's only in India for 4 months. So he would be a non-resident. Paresh, a software engineer at ABC Limited, left India. ऑटोमेटिकली हो गया अभी muted. Okay, 727. So now you can see in this case, Paresh, a software engineer, left India first time on 10th of August 2025. So that means for treatment of his wife. So it does not fall in a special condition because he left India for treatment of his wife. So in this case, both conditions need to be checked. And he will not satisfy condition number 1, but condition 2 is going to be satisfied by him. And if condition number 2 satisfied, he will become a resident. Now, if you will check whether he is a ordinary resident or not ordinary resident. So because he never leave India before this, so he won't be able to fulfill the 730 days condition or 9-year non-resident out of 10-year condition. So the correct answer would be, in case of question number 8, resident and ordinary resident. Clear, students? Question number 9. Determine the residential status of Hasina, a person of Indian origin who come to visit India on 15th April 25 from Dubai. And she left India on 30th April 2025. So you can see in question number 9 again, because she is in India for very short term, 15th till only 30th April. So she will become a non-resident automatically. The last, a deemed resident will be treated as always a resident and not ordinary resident. We all know that. So a deemed resident under section 6(1)(a) would be always a resident and not ordinary resident. So as I have discussed in the last class, when we were completing our last session, in which you might be feeling that residential status provisions are difficult, complicated, a lot of provision regarding resident, non-resident, special condition. And I've told you, if you revise those provision once, and if you'll try the question as I have given you illustration and test your knowledge question, even now, are you feeling that it is complicated topic? Is it a difficult topic? Is it really, really complicated? You have tried the illustration, the questions, and you have revised the provision. And after that, are you still feeling that it is a complicated topic? Religious status is difficult? Because I believe chapter 1 is more complicated in comparison to chapter number 2. In case of presidential status, the provisions are very, very simple. And if you have gone through with the chart presentation, so with the help of that chart, as I have uploaded, I believe that the provisions are crystal clear and these are not that difficult. So now we are moving on to our today's topic. We have discussed the concept of presidential status in our last class. Now we are going to see the impact of being a resident or non-resident. So because your taxability is depend upon your residential status, and I have told you that in the second session you will come to know why that is very important to find out the correct residential status of any person, because your income is going to be taxed according to the residential status of that specific individual or person. So now the topic is start. The second topic we are going to discuss is the incidence of tax, how it affects your tax liability. That is very, very interesting and important also. And let me tell you, it's not at all difficult. Even it is easier than finding out the residential status of a person. So this is taxability effect on resident, ordinary resident. If you are a resident and not ordinary resident, or if you are a non-resident. So how these status will impact the taxability of a person. Now, incidence of tax or burden of tax, what it says section 5. Section 5 provides the scope of total income in terms of residential status of the assessee, because the incidence of tax, incidence means the burden of tax on any person depends upon his residential status. The scope of total income of an assessee depends upon the following three important considerations. What is your status? Whether you are a resident, non-resident, etc. The place of accrual or receipt of income, where that income accrue, whether actual or deemed, and the point of time at which the income had accrued to or was received by or on behalf of the assessee. So these three factors affect the taxability of an income: your status, the place of accrual, and the time of accrual or the time of receipt of that income. How it impacts your taxability, that we are going to discuss one by one with the help of a diagram I have prepared for you. Now, this is very important and interesting diagram. And of course, if you go through with this diagram, you will feel that provisions are really easy. After this diagram, we will discuss all these points in detail. Now, you have to understand that income is divided into 4 categories. In any question, the income will be divided into any of these 4 categories. And you have to see the taxability of that income on the basis of the residential status of that person. So either you would be a resident or ordinary resident. And you can see the category 1 income, which has been mentioned in first row, is going to be taxed for all kind of category of person. So if you earn any income which falls in first point, so that is going to be taxed in all category of income, whether you are a resident, non-resident, etc. It does not matter. That is going to be taxed for everyone. Now, if you earn any income which falls in point number 2, still it's going to be taxed for all kind of residential status. So it does not make a difference whether you fall in resident ordinary, not ordinary, or non-resident. If you earn first point income or second point income, the taxability is same. The things will change from point number 3. If you earn third point income, then it is only taxable for ROR and RNOR. So if you are a non-resident, you need not to pay tax on third category of income. And if you earn fourth category of income, then it is only taxable in case of resident and ordinary resident. And it is not taxable for resident and not ordinary resident or non-resident. So that's why I've told you that it's good to become a non-resident from the point of view of income tax. Why? Because if you are a non-resident, you can see you only need to pay tax on category 1, category 2 income. Even if you are a resident but not ordinary resident, you need to pay tax on category 1, 2 and 3 income. But suppose if you are a resident and ordinary resident, you have to pay tax on everything, whatever you earn, wherever you earn, whenever you earn in the previous year, in India at least. So what are these category of income? That's what we have to understand. So the picture will be more clear. And you will understand that it's good to be a non-resident from the point of view of taxation. Now the first point says income arise. Understand these points very carefully because you have to identify. In the question, they will not given like this. They will given the information that you have earned interest income, you have received business profit, etc. Now you have to identify whether it does fall in first, second, third, and fourth. So the concept of these 4 points, you have to understand very carefully. So the first point says income arises, earn, or deemed to arise or earn. So important point is arise or earn. And the second is deemed to arise or earn in India while received anywhere. So now point number 1 says if you earn any income, if you earn, arise, accrue any income in India, and whether received anywhere, whether received in India or does not, it does not matter. So if income has been earned, arise, accrued in India or deemed to arise. What is deemed to arise? Deemed to arise means indirectly. Arise means directly earning from India. Deemed to arise means indirectly. What is the exact meaning of deemed to arise? That is also a separate provision we will discuss after this table. So for a time being, you can understand arise means directly earning from India and deemed to arise means indirectly earning from India. Clear? So if any income which has been accrue, arise or earn from India, then you have to pay tax on that income in India, whether you are ROR, RNOR or NR. Whether received in India or not does not matter at all. Let me give you an example so you will be able to understand which kind of income we are talking about. Now suppose there is Mr. D who is a doctor. Fine. And there is a Mr. P who is a patient. He is in India. So suppose he needs a special surgery. And for that surgery, Mr. D, who belongs to suppose UK, the hospital called Mr. D for that surgery of Mr. P in India. And Mr. D provided his services in India. For that services, he charged, suppose 50 lakh rupees. This 50 lakh is Mr. D income. But the condition he applied that I will charge 50 lakh rupees, but you have to pay this 50 lakh rupees in my bank account, which is in UK. So this 50 lakh rupees is going to be received by Mr. D where? In UK. So this 50 lakh is going to be received in UK. But where it has been earned, the mean earned mean where you have given the services, where you have sold your goods. So where is the income is actually generating. The real generation, the activity you perform was in India. So technically, this income has been earned or arise or accrue or generate from where? It has been generated from India. So now Mr. D, who must be a non-resident for Indian purpose, because he does not, an Indian citizen, he has never come to India before this, but he came to India for the services rendered. He rendered the services, earned income, but he received outside India. So this kind of income, because it has been earned in India, it is going to be taxed in the hands of Mr. D, whether he is a resident, ordinary, not ordinary, or non-resident. He has to pay tax on that 50 lakh rupees in India. So this kind of income will fall in category 1 income. Understood? So these are category 1 income.
आपके जाने के लिए
When you
आप अच्छे से जा पाए.
render your services. I guess Ashok ji, somebody is unmute there because there is some background sound is there. Sir? Yes. So this kind of income would be treated as income arises or earned, etc. in India. And this is going to be taxed for all kind of person, whether you are a resident or non-resident or ordinary or not ordinary. It does not make a difference. Anjum is saying, sir, can you explain again this topic? Anjum, we are on YouTube. You can scroll back. You can watch this topic as many times as you can, because if we will do this revision again and again, so that will consume our time, and we have limited time to complete the topic. Okay. So that is a kind of income we are talking about in first category. So if income has been earned in India, then it does not matter whether it is being received. Let me give you one more example. Suppose Mr. A is working in an Indian company XYZ Limited in India. So he's doing job in India, providing his services to an Indian company. Suppose his salary is 50 lakh rupees per annum. He also maintains a bank account in USA, and he asked his employer that kindly pay my salary into my USA bank account. I would like to receive this salary in my USA bank account, and suppose the employer did the same. So again, in this case, you can see the salary or the income has been received outside India. But as the services has been provided in India, he is doing job in India. That means where income is being earned. The income is being earned in India. So it does not matter whether you receive that salary in India or outside India. Once the income has been accrue, arise, etc. in India, that is going to be taxed in respect of all category of residential status person, whether you are a resident, non-resident, or ordinary or not ordinary. It does not make a difference. Understood? So the first point was regarding that. So once you have to check the condition, if the income has been earned or deemed to be earned, as I've told you, we will discuss the deemed concept in detail also. But if the income has been earned, arise, or deemed to earn, arise in India. So if the arise is in India, then it does not matter whether they received or in India or outside India. On that kind of income, you have to pay tax in India. Now, the second point is the reversal point, the opposite point. It says now income received or deemed to be received in India. Now income is receiving in India. Received or deemed to be received in India. while earn arise anywhere. Now it's just a reverse case. So if arise in India, received anywhere taxable, even if the reverse is in India, that means if received in India and arise anywhere, that is also going to be taxed in India for all category of person. Let me give you an example of that also. Now let's change example. Now Mr. A, who is a non-resident, he is working in USA in a company. His salary is 50 or $5 lakh. Now he said to his employer that I have a bank account in India and kindly transfer my salary. I want to receive this salary in my Indian bank account. So employer, do the same. So in that case, you can see the income has been earned outside India, but it has been received in India. So again, that is going to be taxed for all category of person, whether you are a resident, ordinary, not ordinary, or non-resident. So you have to remember these two things in your mind, that whether it is arise in India, it's taxable for all. It's received in India, it's taxable for all. Okay, now the third category is different. The third case says income received and arise outside India. Now income is received and arise outside India. Now both is outside India. Even you are earning outside India and you are also receiving that income outside India, but the business controlled from India. But if you are earning an income from a business which is controlled from India, in that situation, that is going to be taxed in case of resident and ordinary resident, and resident and not ordinary resident. That is not going to be taxed in case of non-resident. So if any income which is received and arise outside India, but suppose that business has been controlled from India, the head office of that business, the main holding situation of that business is from India. In that situation, that is going to be taxed for resident, ordinary, resident, not ordinary, but that is not going to be taxed for non-resident. Let me give you an example. Now suppose Mr. A is running a branch office in USA, and the main unit, the controlling unit, control from India. And suppose he is earning income of $1 lakh from this branch office, which has been controlled by India. So now in this case, this $1 lakh is going to be taxed in the hands of Mr. A in India if Mr. A is a resident and ordinary resident, or Mr. A is a resident and not ordinary resident. But if Mr. A is a non-resident, then this income is not going to be taxed. So if any business which is controlled from India and you are earning from that business directly or indirectly, that is going to be taxed if you are a resident, ordinary resident, and resident and not ordinary resident. So if in the question it has been mentioned that the business has been controlled from India and you are earning income outside India, now you can see the business is running outside India, so earning is outside, and even this 1 lakh rupees is received outside India in the bank account. Even if both conditions satisfy, you do not fall in category 1, category 2, but if the business is controlled from India, in that situation, that income is going to be taxed in the hands of a resident, ordinary resident, and resident, not ordinary resident. Now the fourth case would be what? The fourth case would be exclusive everything, like earning outside India, received outside India, and even business controlled outside India. That means no connection from India. You are earning income outside India, you are receiving income outside India, and your business is not controlled from India also. Suppose You are working in a company, Pepsi, USA. Mr. A is working there. He is earning salary of $1 lakh and receiving that salary also outside India. And this company is not controlled from India. So now you can see in this case, Mr. A needs not to pay tax on this income because it is arise outside India, it's control outside India, and income received outside India. If Mr. A is a resident and ordinary resident, then only he needs to pay tax on that income. Even arise outside India, received outside India, control from outside India, still he needs to pay tax if you are a resident and ordinary resident. So if I'll ask you, student, that what we all are, I believe we all are right now resident and ordinary resident. We all are resident and ordinary resident. So technically, if you will earn anything from anywhere in this world, whether received in India, not received in India, arise in India, not arise in India, control in India, not control, you have to pay tax on that income in India. So because we are a resident and ordinary resident, and suppose you went outside India for 10 days, you provide some services there and you earn income. So it's arise outside India, received outside India, but even not control from India, still you need to pay tax because you are a resident and ordinary resident in India. So if you are a ROR, it does not matter where you earn income, whether in India, outside India, even outside its world. Suppose you went to space for any mission, NASA has called you. Suppose NASA has called you, he wants to send you to the Mars. They asked you that you need to go to the Mars, collect some stones and dust, and we will pay you $50 lakh for that. You agreed for that. So they have called you, you went to USA, you went to NASA, then they launched you in a rocket in space, you are on Mars, and you earn income. And suppose they have told you that the salary or the amount we are going to pay you, the amount of $50 lakh, you will get that bag at Mars only. You can collect that bag from there. So money is also kept at Mars. So you went there, you collect the money, you collect the dust, stone, etc. And even when you are coming down to our world, income tax of India will say, okay, come over here. You have to pay tax over here. So even you are earning anything in our world or even outside world. So if you are a ROR, you have to pay tax on that income in India at least. So that is the, you can say, disadvantage of becoming a resident and ordinary resident. So the most beneficial from the point of view of tax is to become a non-resident. You need to pay tax only if income is earned in India or received. Else you need not to pay tax on that. So the impact of this provision is very huge. Back to the provisions. So you can see in point number 1, it was arise in India, taxed for all. Received in India, taxed for all. Arise received outside India, control from India. Then tax for resident, ordinary, and resident not ordinary. Now the 4th category says income received, arise outside India, business also control from outside India. In that situation, it's taxable only for ROR. You can learn the provision this way also. All income you arise in previous year is going to be taxed if you are a resident and ordinary resident. In case of RNOR, only arise, received and controls are taxed. In case of NR, only arise and receive tax. So these 4.1, 2, 3, 4 points are easy to understand. What this 5th number point is doing here. So this is also very interesting and very important for the purpose of solving the question, those relating to this incidence of tax concept. This point number 1 is technically is not real income. It seems like income, but it is not income. And in the question, when points relating to point number 5 would be there, it will make you confuse. It will confuse you. You need not to do anything in point number 5 case. And you can see in all three category we have written down not applicable, not taxable, not taxable. We have written down not applicable because this point number 5 just want to confuse you in the question. That is not the real income. So that's why we do not need to do anything with it. So it's like 5-star, na? Do nothing, eat and do nothing. That's the same way you have to do it. You do not need to do anything. So please remember, do not do anything for point number 5 information. If you going to do any treatment of it, maybe your answer is going to be wrong. So please, it's easy. You need not to do something. Need not to do something is very easy. So please do not do anything if the point number 5 kind of information has been given in the question. Now what it is, let me explain you. Point number 5 says, suppose in the question it has been written, income of earlier year or preceding year has been given. The question says 5 lakh rupees is the income of earlier year. Our previous year is 25-26. So all the income which has been arise, received, control, whatever it is, we can do the treatment if it belongs to our previous year 25-26. Now suppose question says there is 5 lakh rupees income which has been arised in India in previous year 23-24 and not taxed in that year. So if the question will say, na, this is the income of preceding year, untaxed income, not taxed income, then maybe you will feel that we should tax it. Please don't do anything. Just leave that information because we need to just show in the question the income which belongs to our previous year. We are going to solve income for assessment year 26-27, previous year 25-26. So if the question gives you any income, whether taxed earlier, not taxed earlier, belongs to earlier year, belongs to preceding year, please ignore it completely because that treatment belongs to that year. We will not interfere in that year. Understand? So this is easy. You need not to do anything with that information. Now point number B is more important. If you will see in point number 1, 2 and 3 and 4, the taxability depends upon 4 factors. Whether it has been arise or accrue, whether it has been received, whether it has been controlled. You can see on the 3 bases, we actually do the treatment of taxability. We need to see whether it has been arise, where it has been received, and from where the income or the business is going to be controlled. On the basis of these 3 factors, we will decide whether it's going to be taxed for which category of person. Now there is a word which will confuse you, and the word is remitted or brought into India. Can you see any treatment on the basis of remitted or brought into India? The treatment would be on the basis of arise, received, and control. So if there is any information regarding income brought or remitted into India, please ignore it. The treatment will not depend upon how much income you brought into India or remitted into India. The treatment where it has been received, arise, and control. Let me give you an example. This word remit and brought definitely going to confuse you in the question. So please ignore that amount. Suppose the question say there is Mr. A who earn 5 lakh rupees income in USA, out of which 2 lakh rupees received in India. Okay, if now I'll ask you in case of ROR, RNOR and if NR. How much of out of this income is going to be taxed in these three category of person? If the information is here, Mr. A earned 5 lakh in USA, out of which 2 lakh rupees received in India. So how much is going to be taxed in ROR, RNOR and NR? Akhila is saying remitted means transfer. Yes, remitted means just transfer. After receive, whatever you do, that is called remittance. Akhila is saying 2 lakh. 2 lakh in which? Is it in ROR, RNOR or NR? Or in all the category you are saying it's 2 lakh. So you have to give the answer like in which category, how much I am going to tax. ROR, Sushmita saying 5 lakh. Akhila is saying for all three categories. Meenu is saying 2 lakh, all categories. Anyone else? ROR, Nisha is saying 5 lakh. Very good. NOR is saying 2 lakh. Sridhar is saying 5 lakh. 5 lakh by Isha in ROR. Aishal is saying ROR 5 lakh. ROR 5, RNOR 5, NR only 2 lakh. And when the question is silent, then control would be always from that place from where income earned. So in that question, it has not been mentioned from where the business controlled. But let me tell you, the question is silent. We always assume that the control from that place from where income has been earned. तो देखो बहुत सिंपल है, very simple. In case of ROR, it will always pull in. Where receive, when receive, how receive does not matter. Always all income is going to be taxed until otherwise it belongs to earlier year income or preceding year income. So in case of ROR, all current year income you can tax. So first point would be always varies. Now second, RNOR only tax three kinds of income: arise in India, received in India, and control from India. So in this question, you will see arise is 5 lakh, which is outside India. So arise base, we cannot tax it. But out of which 5 lakh, 2 lakh is received in India. So RNOR will come and tax 2 lakh rupees because it's 2 lakh rupees has been received in India. So RNOR is 2 lakh rupees. Now, how much do I need to tax in case of non-resident? How much? In case of non-resident, of course, it taxed arise in India and only received in India. So arise is nothing but 2 lakh rupees received in India. So technically, 2 lakh is going to be taxed in case of non-resident. Clear? So there is no remittance cases there. Now the remittance case over here. Now read very carefully. And what I have told you that remittance income is irrelevant. You need to ignore that line in which it has been written that income has been remitted into India or brought. Let me tell you what is the meaning of remittance. Remittance means to transfer that income. Suppose, let me tell you, if a foreign citizen, a foreign businessman, suppose he earned $10 lakh in his country. He's a non-resident. He earned 10 lakh rupees in his country. He comes to visit India. He brings out of that 10 lakh rupees, he brings $50,000 to visit India. So is that $50 lakh is income received in India or it's just a remittance? He earned that income outside India. He received that income outside India. Now, because he wants to visit India, so we all bring some amount of money when. That's why remittance and brought is outside the purview of taxability. Now, second point, I am writing it down. And please remember very carefully that the remittance and brought does not have any impact on the taxability. If any income has been given remittance or brought, you have to ignore it. Like in the second part, please do not do any treatment, just ignore that income. Now suppose Mr. B earned 10 lakh rupees, 2 lakh remitted to India. Now you just need to do one thing. Just ignore this remittance information. Just ignore it. Just think there is nothing has been written. There is no 2 lakh has been given in the question. Now do the treatment. You will find out the correct answer. Just ignore this 2 lakh rupees information or brought information in the question. You will be able to solve that question correctly. So now if I'll ask you what would be the correct amount of taxed income in these three categories. So of course, in case of ROR, it would be always 10. In case of RNOR, it would be 6 lakh. It would be 6 lakh in case of non-resident. So if you are going to read this information, I believe you are going to do something. So please ignore that information. If you ignore it, you will get the correct answer automatically. Now the last example. Suppose Mr. C earn 8 lakh from USA, out of which 3 lakhs brought into India. Now there are two situations. You have to solve this question in two cases. Suppose control from USA, or suppose control from India. Now on the basis of control from USA, you have to give the three answers, and on the basis of control from India, you have to give the three answers. So if the business has been controlled, now this information of brought is irrelevant, students. So just you have the information, Mr. C earned 8 lakh from USA. And if this business is controlled from USA, then 8 lakh is going to be taxed in case of ROR. Not controlled, not received anything in India, nothing is taxable. Not received in India anything, non-taxable. If it is controlled from India, then 8 lakh is going to be taxed over here, and 8 lakh is going to be taxed over here, but nothing is going to be taxed in case of non-resident. Why? Because if you are a resident and not ordinary resident, and if business has been controlled from India, then that income is going to be taxed in case of resident and not ordinary resident also. Understood? Very good. That is the whole format. We have explained each and everything. And if you want to read the theory regarding it, you can see the theory over here. In this theoretical part, they've explained you that what kind of income is going to be taxed for resident and ordinary resident. And all incomes are going to be taxed. Received in India, arise in India, whether received outside India, etc. For resident and not ordinary resident, what kind of income is taxable? Explained over here. And in case of non-resident, over here. And I have merged all these provisions into this format. So you will find it out which kind of income is taxable for what kind of person. This is for your reading purpose, students. Theoretical part. Now, the topic, as we have discussed in that table, we have seen that there is a concept of deemed to arise in India or deemed to received in India, and that means indirectly. Under income tax, for the purpose of taxability, there is no differentiation, because even if income is deemed to arise, it's going to be taxed for all category. If it is arise, it's going to be taxed for all category. But what is the meaning of deemed to arise? That is going to be explained one by one in this chapter. This is the last thing which we are going to discuss in this chapter, that what is the meaning of income deemed to accrue or arise in India or income deemed to arise in India. So this is the diagram which has been beautifully drafted in your study material, and we are going to discuss each point of this diagram one by one. Income deemed to accrue or arise in India, section 9. Certain types of income are deemed to accrue or arise in India, even though they may accrue. They may actually accrue or arise outside India. So even if the real accrual is outside India, but if certain condition has been fulfilled, then we will treat that income as deemed to accrue or arise in India. And let me tell you once again, if any income is deemed to accrue or arise in India, the treatment would be same as income arise in India. So one by one, the provision will explain you that when that income would be treated as income deemed to arise in India. Any income accruing or arising to an assessee in any place outside India. So in real, it is going to be arise outside India, but it will be treated as deemed to arise in India, whether directly or indirectly, through any business connection in India. So if you have any business connection in India, and if you are earning income outside India, we can consider that income as deemed to arise in India. Now, what is the meaning of business connection? That is going to be explained. If you are earning any income directly or indirectly from any property in India. So if the property is in India and you are receiving rent outside India, you stay outside India. So there are multiple people, those reside outside India, but they have property in India and they let it out that property and earn rental income. So that rental income would also be treated as deemed to arise in India, even if the rent is actually receiving outside India. Through or from any asset or source of income in India. So if you are earning any income from any source of asset which is situated in India, that income could be treated as deemed to arise. Suppose you have a bank account, you are having FDR, etc. So you are earning interest income, shares of Indian company, dividend income, etc. So because the company is in India, the bank is in India, so that income could be treated as income arise of India. They all point are going to be discussed in detail. Through the transfer of a capital asset situated in India would be deemed to accrue or arise in India. So if you'll watch very carefully, so this is for PGBP head, your business head income. They'll explaining that when your business income will be treated as deemed to arise in India. This is for house property income. This is for income from other sources. This is for capital gain. Which had left salary? That is also included later on. So one by one, we are going to discuss these points. You can see the first point is going to discuss as what is the meaning of business connection. When we will consider that even if the income is not directly earning from India, but we will consider that that income is going to be deemed to arise in India. The first case says, in case of business in respect of which all the operations are not carried out in India. So there is a business. The majority part of this business, suppose carrying outside India, and only some operations are carrying in India. So the proportionate part of its income, which belongs to the operation which has been carried out in India, is going to be treated as deemed to arise in India. Let me tell you when. With the help of an example, you will be able to understand. Now suppose there is a company, there's a car company, suppose XYZ, which is a USA based company. They manufacture car and they sold all cars only in USA. So they are not going to sell their car in India. They are selling all their cars in UAE, and the manufacturing also done in USA. But this manufacturing process, only one process they actually conduct in India. Out of this manufacturing process, the manufacturing of tire, suppose the tire manufacturing unit, they operated in India. So their unit manufactured tire in India, and these tires after manufacturing went outside India for the assembling purpose, etc. Car complete, all other activities has been completed in USA. Only one working unit, only one processing has been conducted in India, that was manufacturing of the tires. Even the tires are not selling in India. After manufacturing, the tire went outside India for the purpose of assembling, etc. Now, they complete the finished goods, they complete their car, and they sold that car in USA only. And suppose they earn $5 crore profit via selling these cars. Now, Indian income tax department say, if we won't manufacture the tire, how you would be able to sell the car? So this profit also belongs to us. Now the point clarify you that no, this full income cannot be treated as deemed to arise in India. Only the proportionate part of processing could be treated as deemed to arise in India. So we have to see, suppose the car cost, a single car cost is suppose $40,000. And the tire cost in this is suppose $300. So 300 proportionate income from this profit could be treated as income deemed to arise in India. So what point number wants to explain you, make to understand you that if not the all operations are going on in India, then only the proportionate part of operation would be treated as the operation which has been carried out in India, and that proportionate part of operation which belongs to the income could be treated as deemed to arise in India. So how much income it's going to be treated as deemed to arise in India in this case, this will depend upon the fact of the case. But full income will not be treated. Only a proportionate part which belongs to the operational activities which has been carried out in India could be treated as deemed to arise in India. So first point regarding this, in the case of a business in respect of which all the operations are not carried out in India, in the case of a business of which all the operations are not carried out in India, the income of the business deemed to accrue or arise in India shall be only such part of income as reasonably attributable to the operations carried out in India. Therefore, that part could be treated as deemed to arise in India, and it would be taxed for all kind of person. Now, in the first case, we are doing operations in India. In the second case, purchase of goods in India for export. This is a different case. It seems like the same case, but it is technically different. Now, second case says, suppose Mr. A, he lives in USA. He purchased from India shoes worth rupees from Mr. B. Mr. B of India, he purchased shoes worth rupees, suppose 5 crore. And after that, branding, etc., he sold these shoes for another country, UK, for 9 crore. Now on the profit, whatever he is earned, suppose 3 crore profit he earned. On that profit, Indian Income Tax Department says you need to pay tax in India. But this case, this income would not be treated as deemed to arise in India. The reason income will be treated as deemed to arise in India if any operation has been carried out or if income has been collected from Indian sources. In this case, when Mr. A must have been purchased the goods, he did not take income out of India, but technically he pay 5 crore rupees to Mr. B. And Mr. B will pay tax on that income, on the profit, whatever he must have earned. In the sale, when this USA company sale to UK, the technically income has been derived from UK country, not from India, not directly, not indirectly. So the difference is, in case of manufacturing operation, if any part of operation has been carried out in India, then proportionate income would be deemed to arise. But this is not manufacturing, this is trading. In case of trading, if anyone purchase goods from India, then in that case, if he earn any income after that purchase and sale, that would not be treated as income deemed to arise in India. So in case of trading, that deemed to arise concept does not work. But in case of manufacturing, the proportionate part of income could be treated as deemed to arise in India. So remember, this is a difference between manufacturing and trading. Because in case of export, automatically that person is paying a lot of amount to the Indian person. And from that person, you can recover the tax on the profit he earned. So he's not taking any income out of India. He's technically giving income to the Indian. So purchase of goods in India for export. In case of a non-resident, no income shall be deemed to accrue or arise in India to him through or from the operations which are confined to the purchase of goods in India for the purpose of export. Now, the third point is collection of news and views in India for transmission out of India. So if any news agency is just collecting news from India, only collection, they are not telecasting those news in India and earning any income from advertisement, etc. No, they are just collecting news. In the same way, as per point number 2, somebody was collecting goods from India. So out of that income, whatever he earned, no tax. In the same way, in case of a non-resident, being a person engaged in the business of running a news agency or publishing newspaper, magazine, journal, no income shall be deemed arise to him through or from activities which are confined to collection of news and views in India for transmission out of India. If they transmission into India, then income could be deemed to arise in India. If they collect advertisement charges, etc., that is going to be taxed. So if somebody is just collecting news, in that case, if transmission is not in India, no income would be treated as deemed to arise in India. Now, fourth point is shooting of cinematographic films. So if any foreign producer comes to India, Vedant Tiwari saying, as sir, some foreign bloggers who collect news from India and they telecast them in social media. So that is very difficult to collect. If somebody is collecting news and telecasting via social media, in that case, the recovery process is very, very difficult because the person who is telecasting that is not on Indian transmission. The YouTube, etc., actually controlled from outside India. The Facebook, Instagram, etc., that's all our transmission from outside India. So in that case, you cannot collect tax because the person providing the telecast, etc., he's outside India. The agency is outside India, so we do not have any control upon them. So that would not be the case we are discussing over here. In that case, we cannot charge tax on that. So if the transmission via Indian broadcasting channel, etc., then it's going to be taxed. But YouTube, Meta, etc., is not an Indian channel. The transmission is from outside India, controlled, etc. Everything is outside India. So we cannot collect the tax on that. Shooting of cinematographic films. So if some foreign producer, etc., comes to visit for the purpose of shooting of their documentary, their movie, etc., in that case, again, the same process follows. If they just shoot but does not release, does not earn any income from India, that is not going to be taxed. If they shoot their film at Taj Mahal, etc., any location, and after that they release that movie outside India, does not earn any income from Indian sources, then it is not deemed to arise in India. There would not be any taxable. But there are certain conditions you have to fulfill. So shooting of cinematographic film in India, in the case of non-resident, so the producer should be the non-resident. No income shall be deemed to accrue or arise in India through or from operations which are confined to the shooting of any cinematographic film in India if such non-resident. The condition need to be fulfilled if the producer is an individual. The company who is producing that film, the owner, if it is an individual, he should be a non-resident and non-citizen. So if he become resident or citizen, then the income, whatever he will earn, could be treated as deemed to arise in India. How much it's going to be treated as deemed to be arise in India, that will depend upon fact of the cases. If the producer is a firm, partnership firm, then all the owners, that means all the partners, should be non-resident and non-citizen of India. If any of the partner become resident or citizen, so income could be treated, a proportionate part of income could be treated as deemed to arise in India. And if it is a company, in that case, all shareholders should be non-resident in India and non-citizen of India. So in case of shooting of cinematographic film, if the owner is an individual, he should be non-resident, non-citizen. If it is a partnership firm, all partners should be non-resident, non-citizen. If it is a company, all shareholders should be non-resident, non-citizen. If it is not so, then a proportionate part could be treated as deemed to arise in India. As shooting of film income will divide as such manner of the proportion of shooting place like 20% India. Yes, that could be a way to tax that income or to treat the income deemed to be arise. But these are special cases in which income tax department will decide how much income need to be treated as deemed to be arise. But for a general sense, we can say, Vedant, yes, if the 20%, 15% shooting has been done in India, then that proportionate income could be treated as deemed to arise in India. But in these cases, the collection is not that simple. The department will actually make separate guidelines, permission, etc. Accordingly, then tax would be there. So we have discussed the business connection concept till now. Now we have left with some more provision regarding income deemed to arise or not deemed to arise, etc. And that we will discuss after the break. So Ashok sir, can we go for a small break? Break, Ashok sir. must have your coffee, tea, etc. And we were discussing the provision of incidence of tax. We have covered that. Now we are on income deemed to arise in India or deemed to received in India, in which we have gone through with the business connection interpretation. And we have seen in that provision that if the business connection, if there is manufacturing operations, then it would be proportionate amount could be treated as deemed to arise in India. If that is a case of export, that means trading. In that case, that won't be a case of business connection. So no income would be regarded as deemed to arise in India. In case of transmission of news and in case of cinematographic film, we have gone through with the provision. Now activities confined to display of rough diamonds. In case of foreign company engaged in the business of mining of diamonds, no income shall be deemed to accrue as in India if that is only a display of rough diamond, not sale, through or from the activities which are confined to display of uncut and unsorted diamonds in any special zone notified by the central government. That is for your reading purpose, of course. So that was business connection from the point of view of business, when income could be treated as deemed to arise. Now, income from property, asset, or source of income in India, it says any income which arise from any property, movable, immovable, tangible, intangible, would be deemed to accrue or arise in India. So if any property is in India, then any income you arise from that property is going to be treated as deemed to accrue or arise in India. Here are some examples. Display of diamond means just in a showcase, not for sale, exhibitions. Understand, Vedant? That's kind of an exhibition only. Not a real sale is there. You can go through with these examples, students. This is for your homework. Now, income through transfer of capital assets situated in India. So that is technically a capital gain we are talking about. So if there any asset which is in India, then any income whether received outside India, that income would be treated as deemed to arise from India. So capital gain means profit on sale of asset through the transfer of a capital asset which is situated in India would be deemed to accrue or arise in India in all cases, irrespective of the fact whether the capital asset is movable, immobile, tangible, intangible, the place of registration, document, etc. is in India or outside, and the place of payment of the consideration. So if the asset is in India, then where documentation has been done, whether consideration has been received, it does not make a difference. That income is going to be treated as deemed to arise in India. Now, point number 2 is from salary income. So income which falls under the head salary is deemed to accrue or arise in India if it is earned in India. Salary payable for services rendered in India would be treated as earned in India, even if any salary you received for the leave period. Suppose you are in India, you are earning 5 lakh rupees per month as a salary. So for the year, it would be almost 60 lakh rupees. Now suppose in this year, for 3 months, you went outside India on a leave. So now you are outside India on a leave, but that would be suppose a paid leave. So company is going to pay 5 lakh rupees per month for that leave period also. When you are not in India, you are outside India. So even at that time, you are not earning income in India because you are on leave. You are receiving income even outside India. So that income is not arise in India, not received in India. But for the purpose of salary or for the purpose of taxability, that income would be regarded as deemed to arise in India. So even if you are a non-resident, you have to pay tax on leave period salary. So now the concept has been made that the leave period salary would also be regarded as a deemed to arise in India. So any income under the head salary payable for the rest period or leave which is preceded and succeeded by the services rendered in India and forms part of service contract of employment shall be regarded as income earned in India. So in a summary, in a simple language, I can tell you if any leave, paid leave is there, which is as per your service contract, if any paid leave is there, then that is also going to be treated as deemed to arise in India, whether received in India or outside does not matter. Now, income from salary payable by government for services rendered outside India. So, income from salary which is payable by government to a citizen of India for services rendered outside India would be deemed to accrue or arise in India. So, what it says suppose you are receiving salary from central government. You are Mr. A. Government sent you outside India. Suppose you are working in Japan on behalf of government. You are an ambassador. You understand the ambassador? So you are a central government employee as an ambassador. You are working outside India in Japan in the capacity of as an Indian ambassador. And you are a citizen of India. Now you will remain in Japan for a number of years. So technically, what would be your status? You would be a non-resident because you are not going to visit India at all. So now you are a non-resident but citizen of India working outside India on behalf of government. So whatever salary you will receive, the salary will have three components. Our next chapter is salary heads of income. Day after tomorrow, we will start salary head of income. So the detail of this salary you will come to know from day after tomorrow. But for the time being, in a salary, basically there are three main components. One is basic salary. One is allowances. And then perquisites. What are allowances? What are perquisites? What is basic salary? Everything is going to be discussed from day after tomorrow. So being an employee who is a citizen of India working outside India on behalf of government, who is a non-resident, he is getting salary from central government outside India. So now you can see the income has been earned outside India because you are working in Japan. The income has been received in outside India because the salary is going to be paid in Japan. So you are receiving income outside India and you are a non-resident. Now, as a non-resident, the main taxability only if income received in India or income arise in India. Now, as per the normal provision, if you will analyze this case, that Mr. A, let me show you on a separate sheet. So, central government, India, you are a citizen of India, Mr. A, who is working outside India, Japan. So you are a non-resident, income arise outside India, income received outside India, and you are a non-resident. So technically this income should not be taxed, but you are receiving income from central government, basic salary, allowances, and perquisites. So all these three will be treated as deemed to arise in India. This is a special case. Generally, it should not be taxed. If it is not a central government, if it is a private company, then this income would not be taxed in your hand because you are a non-resident earning outside India, received outside India. But in case of central government, if you're a citizen of India, working outside India, then these three components would be treated as deemed to arise in India. But the good news, out of these three, these two are exempt from tax. In detail, we will discuss this topic in salary head. Only this is going to be tax. So technically, this salary would be treated as deemed to arise in India, but the taxability on only upon basic salary. Allowances and perquisite received outside India is going to be exempted. Right? So that is a special case. That's why we are discussing this. If it is not a government, it is a private company that is not going to be taxed. You can go through this. You can see that. However, allowances and perquisites are allowed outside India by the government to a citizen for service rendered India is exempted. So only basic salary is going to be taxed. Dividend paid by an Indian company outside India. Yes, Mr. Vedant, in case of ambassador or any employee on behalf of government, if you are working outside India only basic salary is taxable. Everything else, allowance per which is received outside India, that is exempted. And the question on the detailed provision we will discuss in salary topic. So dividend paid by an Indian company outside India. So dividend paid by an Indian company outside India is deemed to accrue or rise in India and would be taxable in the hands of shareholder. So whether it's a dividend or interest on debentures of an Indian company, the same treatment would be there. So whether dividend on shares or interest on debenture of an Indian company, that is going to be treated as deemed to arise in India. Now point number 5 and 6 and point number 7. All these 3 points I can make you understand with the help of a small diagram. Now it says, suppose there is a non-resident. Suppose Mr. N. He lives in USA. He's a non-resident for our country. Okay, so he lives in USA. He is receiving royalty. He is receiving interest. He is receiving fees from India. So he is earning these income, royalty income, interest income, and fees. These 3 incomes he is earning from India. Why he might be receiving royalty against? Of course, he must have transferred any copyright, patent, or lease, etc. So he must have been given to India a copyright, patent, or lease. That's why he must be receiving the royalty. Why he might receiving the interest? Because he must have given some kind of loan. And he's also receiving fees. So fees, that means he's providing any kind of services to India. So these are the main component against which he is earning royalty income from Indian sources or interest income or fees income. Now the provision says the payment either made by government of India. So either the royalty is using by the government of India for any formula, etc. Or this loan has been used by government of India, or this services has been used by government of India or other person, whether resident or non-resident. So the payer could be government or it could be other than government. So now the provision says that if any non-resident who is receiving this income is receiving outside India, but the provision says if the payment has been made by government of India for any kind of royalty, interest, or fees to any person outside India, so that income is going to be treated as deemed to arise in India. And because it's going to be treated as deemed to arise in India, so this payment is going to be taxed in the hands of Mr. N, even when he is a non-resident, because the payment has been flowing from Indian government for royalty, interest, and fees. So that is going to be taxed in the hands of Mr. N. Now suppose that is not government, but the payment has been made by other person, whether it's a resident or non-resident. Now there could be 2 situations. If that royalty, not royalty exactly, if that copyright, patent, loan, or services. So if the payment has been made by other than government, then there will be 2 situations, whether these copyright, lease, patent, loans, and service is used in India. If that person be using these copyright, patent, lease, etc., or using that loan or using that services in India. So if it has been used in India, in that case, that royalty, interest, or fees will become deemed to arise in India. And if it is deemed to arise, that means that is going to be taxed in the hands of non-resident Mr. N. If it is not used in India, in that situation, that is not going to be treated as not deemed to arise. So that would be non-taxable in the hands of non-resident. For example, suppose Mr. B, who is the other category person, takes a loan of 50 lakh rupees from Mr. N. If he used that 50 lakh rupees loan in his Indian factory, then whatever interest he is paying on that loan would be deemed to arise from India and going to be taxed in the hands of Mr. N. Simple. Suppose if that 50 lakh rupees loan has been used by Mr. B in his factory, which is in Afghanistan, not in India, which is in Bangladesh, which is in Russia. In that case, that amount has not been used in India. So whatever interest he is paying will not be treated as deemed to arise income from India, not taxed in India. So Mr. N, that interest is not going to be taxed. Suppose if it is proportionately used, out of that 50 lakh, 30 lakh used in Indian factory, 20 lakh outside India. Then of course the 30 lakh rupees proportionate interest is going to be deemed to arise from India, and that is going to be taxed in the hands of Mr. N. So this diagram will help you a lot to understand those three concepts, which is going to be, which is mentioned over there. Sridhar is saying, sir, in dividend case, government deduct TDS, then also pay the tax on this income. Yes, Sridhar. TDS is not the complete tax. They deduct the TDS at the rate of only 10% or 5% and 2% in some other cases. So that is a collection of tax in advance. If your dividend is not that much amount is taxable, at the time of filing of return, we will see if TDS has been deducted, but suppose there is no tax on your dividend due to any exemption, etc., then government will refund that TDS. And suppose if tax is like 10,000 and TDS has been deducted 6,000, then you need to pay 4,000 balance. This concept of TDS we will discuss in detail in the TDS chapter. Okay. So now these 3 points you can go through yourself for your reading purpose. Interest provision, the same is repeating. The same concept has been repeated. Interest cases, again, government is paying, deemed to arise. Other than government, then you have to see the utilization. Same in case of royalty. If government is paying, deemed to arise. If other than government, you need to see the utilization. Same in case of fees. Clear? So these points for your homework, you can go through it. Now 8 point, you can read it, but that is going to be discussed in detail in chapter 3 of unit number 5. So you can skip it, just read it out. Summary, whatever we have discussed with the diagram, I have made a summary of also that provision, that if royalty, fees, interest from the following person deemed to arise: central state government, person, resident, non-resident, if that amount has been used in India, that is going to be taxed. Meaning of income received or deemed to be received. So we have gone through with the provision of income arise or deemed to arise. Now there was a concept in second number point of incidence of tax table that was deemed to be received. So when the income is called deemed to be received, because if it is deemed to be received, then again it's going to be taxed for all kind of person, whether you are a non-resident, ordinary or not ordinary. All assessee are liable to tax in respect of income received or deemed to be received by them in India during the previous year, irrespective of their residential status and the place of activity. Same in case of deemed to arise. When an income would be treated as deemed to be received, so you can see there are 3 cases. The good news, these three cases would fall in different chapters. So we won't be able to make you understand why these incomes are deemed to be received, because we need to understand the whole concept, and that concept is going to be discussed in respective chapters. And you can see in case of contribution to RPF, more than 12% of salary gratuity CKs if made by employer, interest upon such contribution exceeding 9.5%. You won't be able to understand this because this is going to be covered in salary topic. So you can skip it, you can just read it out. This is going to be covered in deduction topic. This is going to be covered in TDS topic. So these three cases are income deemed to be received in India, and these are going to be discussed in respective topics. As I always say, please revise twice. That's my advice to make you wise. So now we have completed the provision. So now what we will do? Now we will practice the question of illustration, etc. So let's move on to solve some question of incidence of tax. So that will make you understand how to solve these kind of question. So we are going to discuss illustration and questions. Okay, illustration number 5. We are discussing with the illustration number 5. From the following particulars of income furnished by Mr. Anirudh pertaining to the year ended on 31st March 2026, compute the total income for the assessment year 26-27 if he is a resident, an ordinary resident, resident but not ordinary resident, and a non-resident. So we have to see what kind of income is going to be taxed in his hand. So one by one we will solve it. Let me open other sheet because in this sheet my cursor is not working. That is illustration number, page number 2.17. Okay, here is the question. From the following particulars of income furnished by Mr. Anirudh pertaining to the year ended 31st March 26, compute the total income in different situations. So now the first point says short-term capital gain on sale of shares of an Indian company received in Germany. Now you have to tell me this 15,000, whether it's going to be taxed in case of ROR, RNOR, or non-resident. So short-term capital gain on sale of shares of an Indian company. So if any asset which belongs to India, so on any income like dividend, etc., is going to be treated as deemed to arise in India. So accordingly, now think about it and tell me this 15,000 rupees going to be taxed in which hands? Sushmita is saying all three. Akhila is saying all three. Very good. Lohit is saying taxable for all. Very good. Isha is saying all case taxable. Very good. Sridhar is saying both. What does mean both, Sridhar? Both, all. Okay. Vedant Tiwari is saying for all. Well done. Mrs. Nisha, correct, Vedant. Very well done, everyone. So this 15,000 is going to be taxed for all category of person. Very good. Next is dividend from a Japanese company received in Japan. Now, if it is suppose an ROR, then RNOR, then NR. Now tell me, this 10,000 is going to be taxed in whose hand? All three, none of them, only one, only two, etc. So dividend from Japanese company and received in Japan. So first of all, identify where has the income arise, where has the income received, and the control. So income has been arise in Japan because a Japanese company, received in Japan, and control if not given in question, assume always outside India if the income arise outside India. So accordingly, what should be the correct answer in this case? Sushmita is saying taxable in ROR. Nisha is saying ROR. Akla is saying ROR. Very good. Lohit saying ROR. Isha is saying control business both outside India, so only taxable ROR. Very good, Isha. Tanisha is saying ROR. Well done. Gaurav is saying ROR. Anjum is saying ROR. Vedant is saying only two. What is two? Only ROR. Kamal is saying ROR. Very good. Sheila is also saying ROR. Well done, everyone, because this income is going to be taxed only in the ends of ROR. Absolutely right. Now, rent from property in London, deposit in a bank in London, later on remitted to India through approved banking channels. Now, this remitted language is irrelevant. Don't read it. Just read this question till over here. Now, the question is rent from property in London and deposit in a bank in London, 75,000. Where it is arise? London. Where received? London. That's it. The extra line is irrelevant for us. So on the basis of this given information, 75,000 is going to be taxed in which end? Only ROR. Absolutely correct. Only ROR. Correct. Well done, everyone. Gaurav, Kamal, Nisha, Anjum, everyone is correct. Sridhar also correct. But now let me tell you, in case of income from house property, this is the income of house property. 75,000 going to be taxed in ROR. This belongs to income from house property. When you will see the solution, the 70% of it is going to be included in the hands of taxability. That is 52,500. Why? Because under income from house property, there is a 30% deduction. Whatever rent is there, 30% is non-taxable, 70% is taxable. So when you see the solution, it would be 52,500. So do not get confused. That 30% provision we will discuss under income under the head house property. So the answer is correct. It's going to be taxed in ROR only, and the amount would be 52,500 rupees. Now the next D case. Dividend from RP Limited, an Indian company. In which category it should be taxable, students? Mr. Vedant, sir, if in case there was written and received in an Indian bank, if the amount has been received in Indian bank, then it is going to be taxed in all the category. Okay. Sushmita is saying all. Lohit is saying taxable in ROR and RNOR. No, Lohit, it's going to be taxed in all because it is an Indian company dividend. So it will be treated as deemed to arise in India. And once something is deemed to arise in India, that is going to be taxed in all cases. Correct, Sridhar? Correct, Anjum? Correct, Gaurav? So this is going to be taxed in all the categories. Now, agricultural income from land in Gujarat. What is going to be the treatment? So if any income which is exempted, etc., we cannot tax it. So because it's an agricultural income in Gujarat, so it is exempted income. And if it is exempted, that means it is not going to be taxed in any category of individual or any category of ROR, RNOR or NR. So that is going to be exempted. Now you can see the solution. The first income has been taxed in all the three categories. Dividend from Japanese company, rent, 70% is taxable. So whenever there is a rental income from building, not land, building. Only 70% needs to be considered. Dividend tax in all the three categories. And of course, agricultural income was exempted, so not going to be taxed in any category. I hope it's clear. You can see this is the rent treatment. They are showing you separately. Moving on to the next illustration. Let me solve a little difficult question. That would be illustration number 8 on page number 2.31. And three category and received in India. So now we have three category, of course. ROR, RNOR, and NR. So I just want to solve it over here. ROR, we will write it down over here. RNOR and NR. So interest on UK development bonds, 50% received in India. So now you need to tell me out of this 10,000, which category of person? Akhil is just saying 5,000 is for all three and another 5,000 is only for ROR. So technically you need to write it down like this, 10,000 for ROR and 5,000 for other categories. You know? Nisha is saying 10,000, 5 and 5, very good. Lohit is saying 10, 5, 5. Vedant is saying in all cases taxable, not correct Vedant. Isha is saying 10, 5, 5, very good. Sridhar is saying 10 for ROR, 5 and 10. Sridhar 50% is remaining. Anjum is saying 10, 5, 5. Well done. Absolutely. In case of resident and ordinary resident, full amount is going to be taxed because it's a current year income. And in case of RNOR and NR, the amount received in India is only going to be taxed. Very well. Now, second, income from a business in Chennai, 50% is received in India. Now, this is interesting. How much needs to be taxed in case of point number 2? 20K for all three as per Lohit. Sushmita, 20,000 in all. Akhilya is saying all three, 20 all. Okay, all category. All 20K for all. Gaurav, Vedant, Isha. Very nice. Because the business is in Chennai. We are not saying it's controlled from Chennai. The business is in Chennai. So technically income is earned from India. And when income is arise or earned from India, that's going to be taxed for all. So this is tax for all category of person, 20,000 for each and every one. Short-term capital gain on sale of share of an Indian company received in London. How does it matter where it is received? Because the shares are in Indian company share. Then whatever interest, dividend, etc. is there, that is deemed to arise in India, again taxable for all. Clear till now? Now, dividend from British company received in London. Now, what is going to be the treatment? The correct answer would be, let me see. Lohit is saying 5K only for ROR, nil for both. Only ROR, very nice. Correct. Only 5,000 is going to be taxed in the hands of ROR. long-term capital gain on sale of plant in Germany, 50% of gains are received in India. So ROR, it's going to be full taxable, and 50% is going to, that means 20,000 is going to be taxed in the hands of RNOR and non-resident. So 50% in the hands of RNOR and NR, and full 100% in ROR case. Now, next point, income earned from business in Germany, which is controlled in Delhi. 40,000 received in India. Now, this is important. Now, tell me what is the treatment of this point. Total 70,000 was the income, 40,000 has been received in India, and the business is controlled in Delhi. But the income has been earned from business in Germany. $40-20 for other two. As per Lohit, Nisha is saying 40-20, 70K and non-resident, non-taxable. By Isha, Anupam is saying 15 all. Lohit is saying 70, 70 and 40. Anyone else? Sushmita 70, 70, 40. Tanisha is saying full amount will tax. Nisha is saying 70, 70, 40. Anyone else? Anjum 70, 70, 40. Akhila is saying ROR, NOR is taxable 70, 70. Sridhar is 70, 40, 40. Gaurav is 70, 70, 40. And the correct answer is, of course, 70, 70 and 40. Why? Because total income was 70,000. So in case of ROR, this full 70,000 is going to be taxed. Now for NOR, RNOR, we taxed arise in India, received in India, and control. And because the business is controlled from Delhi, so full income is going to be taxed in case of RNOR. And for non-resident, only arise and received is taxable. So 40,000 is going to be taxable for non-resident. Clear? Hello, next. Profit from a business in Delhi, but managed entirely from London. Now you can see if the profit is from Delhi, that means my business is in Delhi. So income actually arise from Delhi, that means taxable for all. Does not matter managed from where, but because the business actually in Delhi. So that means 70%, when the word computed has been used, that means it is equivalent to 70%. 30% has been already deducted. Now, either we need to tax full 50,000 or not. And the question, property in London, deposited in a bank at London. So this is going to be taxed only in case of ROR. And no 70% needs to be done. Why? Because this computed word. So whenever there is computed word, you need not to reduce anything out of it. Any confusion in this? Very good. Everything is clear. Very well done. Next is interest on debenture of an Indian company. Now, debenture of an Indian company, that means what? Taxable in all, because it's an Indian company debenture. All kind taxable. Fees for technical services rendered in India. We have just gone through with the provision of royalty, interest and fees for technical services. If it is used in India, then it's going to be taxed for all category of persons. So what it has been written, these have been rendered into India. So that means arise from India. So taxable for all. Profit from a business in Mumbai. Again, business is in Mumbai. Taxable for all. Income from property situated in Nepal and received there. Again, क्या है? Computed. Property in Nepal received there. So only taxable in case of ROR. Past foreign untaxed income brought to India during the previous year. What to do in this case, student? What is the treatment of this 5,000? Let's see who's going to tell me. Correct. Because as soon as this word used, past foreign untaxed or earlier year untaxed or preceding year taxed or untaxed income. So that amount is now do not exist for us. How much amount is received in India, how much brought into India, all is irrelevant. If the word used past untaxed foreign income or earlier year or preceding year income, other information are irrelevant at all. Okay. Income from agricultural land in Nepal received there and then brought to India. Again, Nisha is saying ROR, Ranjan is saying ROR 18, P. Mujahid is saying ROR. The correct answer is, of course, only ROR. Because it's not an agricultural income. It is not exempted. Because exemption would be only if agricultural income in India. So if your agricultural land in Nepal, etc., other countries, then it would not be treated as an agricultural income. It would be treated as a taxable income. And because it has been earned outside India, received there. So only taxed in case of ROR. Income from profession in Kenya, which was set up in India, received there, but spent in India. What is going to be the treatment of this? Is there a problem? My net or what? See. Yes. Was stuck, I guess. Now it's fine. So, income from profession in Kenya received there. So, Sridhar is saying ROR and NOR is taxable. Tanisha is saying ROR, RNOR 5,000. Lohit saying 550. So, correct? Because it's in Kenya and set up in India. Received there. So, in case of ROR, it would be full taxable. And in case of NOR, it's also full taxable. Why? Because it has been set up in India. Non-taxable in case of non-resident. Well done, everyone. Next is gift received on the occasion of his wedding, 20,000 rupees. So gift received on wedding is an exempted income. So this you will going to understand in income from other source. So this does not belong to this chapter. That's why we can skip it. Gift received on marriage is exempted in the hands of receiver. Interest on saving bank deposit in State Bank of India. What should be the treatment? Taxable for all. Why? Because the bank is in India, then interest would be treated as deemed to arise in India for all. So this is going to be tax for all. Next is So next is income from business in Russia, controlled in Russia. Now you can see business in Russia, controlled in Russia. So only going to be taxed for ROR. Dividend from Reliance Petroleum Limited, an Indian company, taxable for all category of person. Agricultural income from land in Rajasthan. Now this is exempted. So this is not going to be included in any of the categories. That was the illustration. The solution is over here. You can go through it. You can understand in detail why and what we have done in the solution part. So this chapter, you can see broadly in two kind of question can be framed. One is regarding to find out the residential status, and I believe that would be for individual only, and in that also I believe that would be a case of special circumstances, category B case. And of course in that assessee would be a resident. That's why you have to find out the sub classification also. And the other kind of question is this, as we have gone through, taxability on the basis of your residential status, incidence of tax question. Let me see if there is any query. No query yet. So student, if you want to ask anything, you can ask, because we have completed. Now you have homework, and in homework you have to complete all the test your knowledge questions. Illustration number 6 you can try also. And after that, illustration number 6, all test your knowledge question number 3, 4, 5, 6, and 7. Please try all these questions. If there would be any issue, you can ask me in the next session. That would be day after tomorrow. Sushmita is asking, what is the income from agricultural from foreign country considered as? It would be a taxable income and it would be a business income, because farming or agriculture is a business activity. So if it isn't from Indian land, it is exempted. But if it is from foreign country, then it's going to be taxed as your business income. Okay, Sushmita. Sridhar is saying illustration number 8. There's a calculation of gross total income. You just need to calculate your income till gross total income. Deductions would be discussed later in the deduction topic. So the solution part, the gross total income is more than enough. Up to that, you need to understand the solution part. Deductions part need to be discussed in the deduction chapter. Any other query, students? Okay, let me tell you the first head of income. Like we have gone through basic concept chapter number 1. There are numerical topics, but that was not that difficult, not that complicated. Again, residential status, I believe that is the simplest chapter for numerical topic. Some days calculation and incidence of tax also you can see, not that complicated. Now the third topic, what we will going to discuss day after tomorrow, that would be the first head of income, that is salary. It's a gigantic topic. Almost 150 pages pages chapter is this, and that is going to include multiple provisions. So now you will encounter with the income tax in real form when we will go through salary topic. Nothing is difficult. There would be only 2 problems in salary topic. It's huge. So you have to learn multiple provisions. Even if you will see any individual provision. So there is no individual provision which is difficult. No, nothing. All individual provisions are easy, but the problem is the question would be a consolidated question of an employee to calculate the salary. So when it's a consolidated question in which you have to solve multiple things, that could be a problem. So for that chapter, you have to be very prepared, be more sincere now for your studies, because now we are moving on to the more technical topics, which is salary, then house property, etc. So because we will go through salary topic, I will recommend you, I will request you that please revise your basic concept chapter number 1 and residential chapter number 2. Under income tax, it's very important that the continuous revision should be there. In other subject, I personally feel that if you are going through any chapter, any subject, then you can revise that topic after 1 month also. So it would not be that problem. You will revise, you will understand the provision, you can go through it. But it's not in case of income tax. I can assure you, we have gone through with basic concept chapter and residential status. If you did not revise these topic for next 1 month, and then you start revising these topic after 1 month, you will find these topic like a new chapter again. So how to prepare your income tax subject? It's a very important advice to all of you. There's a continuous revision is required. Like after 1 or 10 days, you have to make a schedule like this, that after 10 days, I will revise that topic. It will not take much time. Like if you go through with basic chapter now, it will take maximum 2 or 3 hours for revision. And same in case of residential status. Once you revise it, then after 15 days again, if you come to revise it, it will take only 1 hour for the purpose of revision. But in that situation, you will always remember the concept of income tax regularly. If you will going to revise that topic after 1 month, then I promise you, you will feel it same difficult. You will feel that I am revising or reading this chapter first time. So please make a habit of revision of income tax chapters regularly. As we will discuss salary topic, after completion of salary, you have to again revise salary topic continuously. It will not take much time, but you will never going to fear with this chapter or this subject ever if you will go for continuous revision of this chapter and this topic and this subject. So please make an 1 hour in a day for revision of income tax. So that will make this chapter very strong, and you will never going to think that this is a chapter which is very difficult. This is a subject which is very difficult to revise. Please follow this tip for the revision of income tax topic. Miss Mac is saying, sir, income tax subject is easy up to this chapter. Look, Mac, everything is easy. If you are feeling interest in this subject, you will find it out easy. The problem under income tax, as I have told you students, is revision after 1 month will make very difficult for all of you to understand all the provisions again. So within 15 days or within 20 days, one revision is required of chapter. It will not take much time, I am assuring you. It will take only 30 minutes in a day. If this will be your habit, income tax will never bother you. You will always feel income tax is so easy. So your explanation is best. It is very easy to understand. Thank you so much, Mahek. So now this is story time. You can send your queries between that time duration, and here's a very small story for all of you. तो एक बार की बात है, एक छोटी बच्ची थी और उसको पैसे की काफी रिक्वायरमेंट थी. तो पैसे की इकट्ठा करने के लिए रोड पर जा रही थी, एंड एक पेंटर जिसको वो जानती थी, उसने उस पेंटर को टीवी में देखा था, न्यूज़पेपर में. तो उसको वो पेंटर दिखे रोड पर जाते हुए, तो वो उनके पास गई. उसने रिक्वेस्ट करा कि मेरे को बहुत मनी की रिक्वायरमेंट है. तो उस पेंटर को लगा कि हाँ ये सच बोल रही है. उस पेंटर ने कहा ओके 10 मिनट रुको. उस पेंटर ने अपना कैनवास निकाला, अपने ब्रश निकाले, अपना एक ड्राइंग बनाई, और उस ड्राइंग को बनाकर उस बच्चे को बोला कि थोड़ी दूर पर एक आर्ट गैलरी है, आप इस ड्राइंग को वहां जाओ, वहां के ओनर को दिखाना, मैंने साइन कर दिए हैं, एंड यू विल गेट 1 लाख रुपीज. तो उस बच्ची को बिलीव ही नहीं हुआ कि विद इन 10 मिनट्स हाउ कैन समवन मेक दिस काइंड ऑफ पेंटिंग कि उसके बदले में 1 लाख रुपीज का पेमेंट हो जाए. फिर भी उसने ट्राई करा, वो वहां गई, उसने वहां के ओनर को वो दिखाया, उसने वो पेंटिंग देखी, ही रिकॉग्नाइज दैट पेंटिंग, उसने उस लड़की को 1 लाख रुपए दे दिए. द गर्ल केम बैक एंड उसने उनसे पूछा कि सिर्फ 10 मिनट में आपने ऐसी पेंटिंग बना दी, मतलब ये तो बहुत आसान है आपके लिए कि ओनली 10 मिनट्स में आपने ये ड्रॉ करा, दिस इज अ वेरी इजी जॉब फॉर यू. उस पेंटर ने बोला नहीं बेटा, ऐसा नहीं है, ये 10 मिनट की मेहनत नहीं. लास्ट 25 ईयर्स में मैंने जो प्रैक्टिस करी है ड्राइंग्स बनाने में, पेंटिंग्स बनाने में, जो 25 ईयर्स की मेरी मेहनत है ना, उसका ये रिजल्ट है कि अब मैं उस प्रैक्टिस से वो जो मेजरमेंट है पेंटिंग्स का, ड्राइंग्स का, स्केच का, जो लाइनिंग्स का, वो मैं 10 मिनट्स में ड्रॉ कर सकता हूं. तो जो तुम्हें 10 मिनट का मेरा दिख रहा है ना एफर्ट, वो एक्चुअली 25 ईयर्स का एफर्ट है. तो वो सिर्फ आप 10 मिनट से जज कर रहे हो. तो जो भी लोग सक्सेसफुल होते हैं ना, मे बी विल फील के डॉक्टर ने किया ही क्या है, एक ऑपरेशन के इतने पैसे ले रहा है, या ये कंसल्टेंसी के इतने पैसे क्यों चार्ज हो रहे हैं. सो दैट इज नॉट फॉर दैट 10 minutes or 5 minutes. That is the result of the study, the experience, the time they have spent for that working. उसके लिए चार्ज हो. तो जब कोई स्टूडेंट आपको ऐसा दिखता है कि वो टॉप कर रहा है, उसके मार्क्स अच्छे आ रहे हैं, ये तो बहुत कम टाइम पढ़कर ऐसा कर लेता है, ऐसा कभी नहीं होता. उसके पीछे के एफर्ट्स हमें कभी नहीं दिखते. तो आप भी अगर लाइफ में चाहते हो कि आप उतने एक्सपर्ट बन जाओ कि आपको बहुत रिकग्निशन मिले, अच्छा पैसा मिले, सो यू हैव टू वर्क हार्ड. तो कोई भी चीज 10 मिनट में अगर कोई कर पा रहा है आज, तो उसके पीछे एक बहुत लंबी स्टोरी होती है, एक बहुत हार्ड वर्क होता है. एंड आपकी लाइफ की जो स्टोरी होगी ना, टू बिकम अ सीए, व्हेन यू विल बी अ सीए, मे बी समबडी विल थिंक अरे 3 इयर्स तो पढ़ना होता है या 4 इयर्स पढ़ना होता है. यू नो कि आपने कितना हार्डवर्क किया है, कितना टाइम लगाया है, कि अब हमें उस with the tag of that CA, with this prefix, we can earn a lot of money as a salary employee, as in practice. तो वो जब आज जो बच्चे सीए नहीं कर रहे हैं, जो आज शायद घूमने जा रहे हैं, पार्टी कर रहे हैं, अपनी लाइफ एंजॉय कर रहे हैं, अपनी बर्थडे सेलिब्रेट कर रहे हैं, होली दिवाली एंजॉय कर रहे हैं, एंड आप वो सब छोड़ के अपनी पढ़ाई कर रहे हैं, ये किसी को नहीं दिखेगा, लेकिन दैट विल वर्थ फॉर यू. व्हेन यू बिकम अ सीए, जो भी आपने सेक्रीफाइसेस किए ना, you will realize when you will be pay off, you will realize कि pay off किस चीज के लिए हो रहा है, because of that efforts. So companies will come in campus and they'll pay you a handsome amount of salary. Why? Because they know that you have put your 20 years, 10 years, 5 years in your studies very sincerely. You have sacrificed a lot. तो मेहनत करते रहो, उसका कोई शॉर्टकट नहीं है. And once you will get your success, you will realize that all your hard work is going to be pay off one day. And that one day will be start from day one. The day one, day two, day three, all one day in anyone's life will come after multiple days. So we see that one day, but he or she knows that is not one day. It was day one, day two, day three, 1000, day 2000. So please पढ़ते रहिए. We will see each other with the topic of salary. Salary का topic के पहले boost, bonvita वगैरह खा लेना, बहुत मेहनत लगेगी तो समझने में. So we will see each other on day after tomorrow. Till that, all the best. And if there is any query, you can ask me, students, as we are going to close the session. I guess there is no query. So Ashok sir, can we close the session now? Yes, over. Good day, Ashok sir.